And one of the signs that you're in a bear market is that the rallies are violent. 20% rallies in bounces in a bear market happen all the time. That's how people get wrecked all the way down. Sure. Even though they're right directionally, they can't position it properly. Whereas you don't get that on the move up. You get 2 to 5% days, 2 to 5% days, 2 to 5% days. So the bullishness that we're seeing in these assets right now, which is this relief rally because of like the window of weakness, still are going to face the headwinds of the tariffs, still are going to face the headwinds of the liquidity, and then we could be looking for a down move. So as traders, this is why it's important that like we take advantage of this. This is not a bad thing. It's a bad thing for everybody else who's not part of the markets and not exposed to markets.
Yeah.
It's terrible.
If you're not a trader, unfortunately.
It's terrible if you're retiring. Terrible if you need. I get all that. I'm not trying to be flippant about it. What I'm trying to say is that you go tell you plan for yourself and your family, and you go tell those that you can, hey, there's an opportunity to make money on the downside here. If you do that with puts, if you sell out now and sell out at the top and you hold, if you look for things to buy at the bottom, whatever it is, but holding through a stagflationary period, that's the worst thing you could possibly do. You're not making anything. You're getting eaten out by inflation. You're not making anything. And it'll be traders like us who have the opportunities to like, oh, top and bottom, top and bottom, top and bottom, top and bottom. So we'll see. All right. Anything else on that, Mike, before we move on?
I don't think so. I think I'm continuing to try to remain intraday and looking for some of those longer dated value buys over time still. So just like we've been discussing these last couple of after hour sessions, I'm going to basically just slowly dollar cost average over the next 6 months or so. So nothing too exciting.
So there's not a whole lot of things that I thought was interesting that happened over the last week for the market minute news. A couple of things that we did see is that NVIDIA got a bounce of 2.5% as it unveiled what was it, 500 billion? Yeah, some more investment within the space. CBEX options flow spiked as traders bet on volatility. So actually, if we take a look at the options market, I would have expected for the premiums to have come down some, but we're actually getting some pretty high premiums on some of these options even further out, which means that when you're getting the higher premium costs, when you're expecting them to be lower, that means there's still uncertainty and resistance like within the equity space. That's not being reflected by the bounce that you're seeing on the assets. Gold is hovering around 3,300. Did you see that pullback in gold? And it's not skyrocketing, but it's not cratering. So it's sort of like, what's going to happen here?
A little bit of a consolidation zone so far. Yep. I
don't know what happens to gold and stagflation. I got to start going through books from the 1970s to be what happens in stagflation. I'm a baby when it comes to this stuff. I don't know what goes on. Does gold rip? I don't think so.
It's hard. It's tough to try to trade against the trend on gold. I'll tell you that much. I would not resist the bullish trend on gold at the moment. It's still one of the best performing assets for the year.
So I get that on the physical gold and on the futures market. But let's say you wanted to be like, oh, I want to be cute and I want to go for the miners or junior miners. They're going to have headwinds with stagflation too. Like operationally, they're going to have headwinds with stagflation. So like I never know
potentially. But even those miners, especially the names that I had listed off, what was it, 6 or 7 weeks ago on the show, the gold miners that are suddenly getting a ton of volume and trading activity, those are still moving upward.